subjects. Sometimes we start off with some basics. What are the basics of Nadex binaries, the basics of Nadex spreads, and then we go through and talk about different strategies and systems, way to use them, and ways to take advantage of the capped risk products that Nadex offers. And if you're brand new and kind of just joining us, we're going to mainly talk about, like I said, we're going to talk about how to trade news events tonight. There's different ways you could trade them with Nadex binaries. There's different ways you could trade them with Nadex spreads. Tonight, just for time constraints, we're mainly going to focus on Nadex spreads. I'm going to show you a couple different ways that we use Nadex spreads to trade some news events. So if you're brand new to Nadex spreads, you're not really familiar with how they work, some of this might be a little bit over your head, but make sure to follow through and take good notes. You can always go back through on the Nadex website and the Nadex YouTube channel, and you can check out some of the archives where we cover some of the basics of spreads for you to get a little bit better handle on them to help understand some of what we're covering tonight. Okay, and if you have questions, feel free to ask questions regarding what we're covering. If I don't answer your question right away, I'm not avoiding you. I might be covering it in the next section. Otherwise, at the end, I'll try to catch up on any questions. I just want to make sure to not get too sidetracked or distracted and kind of keep us on base here. Grant asked, did we get disconnected? Did anybody lose audio or video at all? Grant, otherwise, if you can hear me, you might just have to log off and log back in. Otherwise, Gary, Javier, you guys good? Everything's still coming through loud and clear? All right, good. All right, well, let's hop right in here. Let's get rolling. Let's knock out our disclosures here. As always, trading futures, options, or any financial instrument involves risk, may not be suitable for every investor. Information here in this webinar is for educational and informational purposes only and is not an offer or solicitation of an offer to buy or sell any particular financial instrument offered by Nadex, and past performance is not indicative of future results. Like I said, if you are brand new to Nadex, you can hop on over here to nadex.com and you can go through the top tabs here and get some information on what is Nadex, who is Nadex. Basically, Nadex offers two different products. They offer binary options and spreads, and you can go through each one of these tabs and get a good overview and some education on what are binaries and what are spreads, how do they work. And I want to draw your attention right here under trading platforms. You've got the Nadex platform. They have a mobile app, but I want to draw your attention right here to the demo trading platform. If you don't already have a demo account, make sure to go ahead and open one. Even open one right now while we're on this webinar. Even if you don't have a live account, Nadex will give you a free demo account with $25,000 of demo money. Okay, all you have to do, select a username, fill out some quick information, and hit Open Demo Account. In just a few moments, you'll get an email with a temporary username. You can use that username, you can create a password, and you can log right into the demo account. Okay, as soon as you do that, you can go right up here to My Account, and you can go to Settings, and right here, Password. That'll let you change the password. I'm sorry, they'll send you a username and a temporary password. You can log in with that and change your password to whatever you'd like it to be. But it helps get you familiar with the Nadex platform, get familiar with the different products that they offer as far as the binaries and spreads, different markets they offer that on, entering and exiting orders. Just a great way to get familiar with the Nadex platform, test out any strategies or systems. You may want to use it to test out a couple of the strategies I'm going to show you tonight on the Nadex spreads. And I would definitely suggest that you always use your demo account to test out anything new, get it mastered in demo before you start using your live money. Okay, so take advantage of that tool. And like I said, if you don't have one already, hop on over there and open a free demo account with Nadex. My name is John Skelton. I don't work for Nadex. I'm with a company called Apex Investing. Apex and Nadex, two separate companies. Nadex is an exchange. Apex, we're an online company of traders helping traders. We're an education company. We have over 20,000 members. We have strategies and systems and trade rooms and all kind of stuff. We focus very much on risk management and probability. And that's why we love the Nadex products so much. with the upfront known capped risk. And we're traders just like you. We're a Nadex education partner. We do these webinars each and every Monday for Nadex. We normally do them at 7 p.m. Today we're doing it a little bit earlier, and we might adjust some of the time frames here over the next couple of weeks. Some time frames work a little bit better for people than others, but these webinars are being recorded. If you happen to miss one of the webinars, you can find them in just a day or two on the archived recordings. So I've been with Apex now for about 3 years. I have a background as a stockbroker and banking. I've got about 15 years in the financial field. But I'm an educator. I'm a trader just like you. I trade Nadex binaries and spreads on a daily basis. And so we're just here to give you some free education about Nadex products, how they work, and just kind of share with you a couple of ways that we use them. Anyone that's been trading for a while, I talk to a lot of new traders, I talk to a lot of veteran traders, and news events are a pretty big deal. So that's what we want to talk about tonight, how to be aware of upcoming news, how to plan ahead for news trades, and how news affects the market, some ways you can backtest it, and how to utilize the Nadex products, okay? If you've been trading for a while, you know, I know a lot of people that say, hey, when news comes out, I don't trade because the market can go crazy, the market can spike up, it can spike down. Some news has very little impact, okay? Some news has major impact. So I know some people that only trade around news events. They're like, hey, I'm not going to trade any other time except around news events when I know there's going to be movement. Other people say, I don't trade at all during news events because I'm scared. I don't know which way to go. So what I want to talk to you about tonight is showing you some ways that you don't necessarily have to be scared of news events, how you can take advantage of them and have some high probability trades but still have some great capped risk. And when I talk about news events, I'm talking about earnings reports, or every Wednesday you have the weekly oil inventory report that can affect oil. On Thursdays you've got the natural gas inventory reports. You can have the FOMC, unemployment numbers, you know, Fed funds rates. You can also have overseas news events, okay? Stuff that would affect the euro or the pound. So it's not just based on news events that are coming out here in the US, all right? Even news events overseas can have an effect on our markets. It can have effect on our currencies. Let's say, for example, there's a news event coming out that's going to affect the euro, all right? You've got Bernanke talking or something, right? And you have an effect on the euro, that can affect Forex pairs, the euro dollar, right? It can affect other pairs. Something that affects the dollar can affect our markets. It can affect oil. So there's all kind of news events out there throughout the week, okay, that can cause some good moves, all right? So sometimes news affects, like I said, stock indexes, commodities, Forex, and sometimes more than one at a time, okay? Big impact news can create directional opportunities, all right? Some news events come out, don't really have any effect on the market, right? Some news events that come out, they have a little bit of effect. The market will move a little bit, or it might pop up or down, and then it, you know, comes back to where it was. You know, it creates just a temporary quick move or just a real small move. But there's some news events that historically have huge moves on the market, can cause the market to move a ton, right? Can cause some of the stock indexes to move hundreds of pips, or even some of the Forex markets move hundreds of pips, and can create a great directional opportunity. Problem is, it's hard to determine ahead of time where the market's going to go. You know there's a news event coming out. You know historically this news event makes the market move 100 pips, okay? But we don't know. Is it going to be a positive or negative news release? Is the market going to go up, or is the market going to go down, right? And probably half the time you've just have a feeling, or you've done research, or you've watched something on TV, and your gut tells you the market's going to go up. So you buy ahead of time before the news comes out. And what happens? Boom, news comes out, where does the market go? 100 pips the other way, right? Show of hands, raise your hand, put something in the question box here. Has anybody ever traded news? Has anybody ever had a news event come out and cause their trade to go against them? Anybody had that happen? Eric says, yes, sir. Or has anybody ever been just trading? Hey, I'm just sitting here. It's a, Monday, it's a Wednesday, whatever it is, and I'm just trading, and, markets are kind of moving. It's not a bad day. Boom. What just happened? And like, you ever had that? And the market just flies out of nowhere, goes crazy. And you're like, whoa, what just happened? Something bad must have happened in the world. Did somebody get bombed? Did somebody go to war? What happens? And you're checking the news, and you're looking on Facebook, and you turn on the TV, and nothing crazy happened. And then what? You hop on a forum, you hop on a trading forum, and everybody's talking about, man, I banked it this morning on that oil inventory report, or I banked it on, and you're like, what? And you felt like you just got shot in the dark, right? You got blindsided. You had no idea it was coming out. But all these other traders knew ahead of time it was coming out. They checked for news, they planned ahead, and they actually made a trade plan around it, right? And that's one of the big things about trading that I see a lot of people miss out on, okay, is because with trading, we get so wrapped up in, okay, I'm going to sit down, I'm going to be in front of my computer, I'm going to trade these certain hours, and I've got my charts up, I know my strategy and system, I'm focused on the system rules, I'm watching all my indicators, does this line up, does that line up, I'm tunnel visioned on my screen and my chart and my ABC 1, 2, 3s of my rules, that sometimes, which is good, but sometimes I need to think outside of the box, which is, hey, yes, I need to be a master of my strategy or system. I need to know the ABCs and 1, 2, 3s. I need to know the rules. But what else is going on? I need to read the markets. One of the first things that I personally do in the mornings before I trade, while I'm having all my charts load up, I'm checking for news. I want to know, hey, I don't want to be blindsided. I might have the perfect setup for my strategy or system. 3 of the 4 indicators turn green or turn red, and this crossed over, and this level. That's an entry. But if I know that a big news event's coming out 2 minutes later, I might think twice about that entry, right? That's just smart trading. And that's a big thing that I see a lot of traders, especially new traders, overlook, is remembering to, okay, what is going on in the markets? What news events are coming out today? What news events came out overnight? How did it affect overseas markets overnight? How might it affect the market today? Kind of thinking outside the box and knowing what's going on there, okay? So big impact news can create directional opportunities, the market flying up or flying down, huge. Smaller impact news can create what we call range-bound opportunities, and we're going to talk about both of those. And now there's various news outlets that you can use and websites, take your pick. Over at Apex, we have a news calendar that we have on our site. I'll show you how you can get access to that later. You can check out, all the big news events coming out. There's, you can go to Forex Factory. You can go to, there's a ton of different ones out there. Take your pick, but they'll let you know what news events are coming out this week that could have effects on the market. Forex Factory, for example, you can go on there and see what, if you're a Forex trader, you can go on there, it'll show you some news events that are coming out. It'll show you, is it a high impact news event? Is it a low impact news event? You can go and click it. It'll show you historically what type of move it has on the market historically. And you can see, all right, there's this news event coming out, and historically it doesn't move the market very much, but okay, I need to be aware of it, right? Or, hey, this one historically moves the market 100 pips. Okay, cool, I definitely need to be aware of that. So not only can you know what news is coming up, but you can also see, okay, what kind of effect does it normally have? And that could help you plan ahead to know, okay, going into this event, what should I expect? And therefore, what type of strategy or system should I use? Okay? So, like I said, it's hard to know ahead of time the direction because you don't always know what type of news it's going to be. Is it an interest rate increase or decrease? Is it an inventory increase or decrease? Right now we're in the middle of earnings season, right? For a lot of these big companies, and that can affect their stock. It can therefore affect the stock indices. Is it going to be positive or negative earnings, above or below expectations? We never know. And normally the expectations are wrong. If you're a person that wants to trade news and you just watch CNN to get an idea of, oh, they're saying it'll, you know, certain Google earnings or whatever are going to be up, I'm going to just go buy. Normally I can tell you what they're telling you is going to be wrong, or half the time going to be wrong. So it's hard to enter directionally before the news, but it's also very hard sometimes to enter directionally after the news, right? You've got some big earning. Any of you ever traded Google earnings? It comes out at like 4 o'clock. You ever seen how fast that market moves from 4 to 4:15? It's craziness. So it's hard to know ahead of time to go long or short, buy or sell. So then when you wait for the news to come out, say, okay, I'm going to wait for the news to come out. I'm going to see where the market goes. Okay, the news just came out. Boom, the market's flying up. Sweet. So I want to buy because now I know the market's going up. What happens 9 times out of 10 when you do that? Has anybody ever tried it? Show of hands. I'll tell you what happens. Big, huge news comes out. Bam, positive report. Market's flying up out of nowhere. It flew up 50, 60 pips, right? And you're like, ooh, I'm getting in. I'm buying. So you buy. What happens? What seems to happen 9 times out of 10 as soon as you buy? Boop, market starts to come back down, right? It's coming back down. Eric said it right. Eric, it drops. Shot up 60 pips. Boom. As soon as I press buy, it drops 20 pips. And it kicks me out because I don't want to lose more than that, so I got out. And as soon as I got out, because I didn't want to lose more, then what did it do? Popped right back up and kept going, didn't it? Anyone ever had it happen? And then what do you, then you turn into, you know, Mel Gibson in that conspiracy movie. Remember that movie? I think it was called Conspiracy. Then you become a conspiracy theorist, right? They're out to get me. The market did that just because I entered my trade. The market's after me. Every time I place a trade, the whole world market, international market of millions of dollars and millions of people, they were after me. They knew that they knew I was trading right then. The whole world changed their direction just to get me. And as soon as they got me and got my stop and stopped me out, they kept on going. Everybody's out to get me, right? That's how we feel, right? But now we know better. That's not the case. But what happened? What happened was the news came out, affected the market. The market shot up 50, 60 pips. Well, what do you think happened for the people that got in right before the news? Or what do you think happened for the people that entered right at the news to buy? Well, their position just went up 60 pips, right? So all those people that bought, what do you think they're doing after 50, 60 pips? You think they might be selling so they can get out and run with their profits because they're really happy, right? So the market shot up, people start selling to take a profit, right? The market comes down a little bit. And then everyone else starts to buy right there, and the market comes down, they hit your stops, the market keeps going, right? We've all had it. It's so hard to catch that fast move afterwards. Or sometimes when you wait till after and the market's moved a lot, your pricing and your premium might not be there. You might not have a great pricing or premium that you're wanting after the news. So what you ask is, well, then how can I trade it? John, you're telling me it's hard to get in before. You're telling me that if I wait till after to see what happens, it's hard. And so how do I trade the news? Okay, well, let's talk about a couple of different things here, all right? And because news trading is something that affects all of us, and there's news every single week, and news trading is something that also affects something I see a lot of with Nadex traders is a lot of Nadex traders, especially if you're new to trading, okay? Grant, yep, we're actually going to talk about some straddles here in just a moment. Absolutely, okay? I can't show you one live because the Nadex platform is actually, there's no spreads from 5 to 6, which is actually the time of this webinar today, but I'm going to show you how we do them, okay? I'm going to talk to you about straddles, and I'm going to talk to you about iron condors using Nadex spreads. So we will cover that, Grant, absolutely. But a lot of part-time traders love the Nadex products, especially if they're new to trading. You know, you still have an 8 to 5 job and you want to learn to trade, so you're trading at night and you're trading part-time. You know, think about this real quick for those of you that are part-time. Okay, so I've got a full-time job. I want to trade. I want to try out this trading thing. You know, I want to trade with Nadex at night. But I've got a full-time job. I don't get off till 5 o'clock. I got to go get the kids. I got to run errands. I got to do dinner. I got to do family time. I don't have a lot of time to trade at night, right? I've just got a couple of hours at night to trade. And maybe I can't even trade every single night. Maybe it's only a few nights a week. And I'm getting really discouraged because it seems like the nights that I'm available to trade, I sit in front of the computer, taking away time from my life, taking away time from my kids and my family, and the market's not moving. Nothing's going on. And I'm getting discouraged. My wife or my husband's upset at me because I'm taking time away and they're not seeing results. I just don't know this is working out for me. But then tomorrow night I can't trade. But then the next night I get on and people are talking about how they did so great last night and they had all these great trades last night, and that was a night I didn't trade. And I always seem to be trading the wrong day. This is frustrating me. Anybody experience that? Or is anybody experiencing that now? Is that your current experience with trying to get into trading part-time? Anybody know what I'm talking about? Pedro says, yep, that's me. Yep, I'm getting some nods here. Well, I want to give you a little bit of a tip there, okay? A couple things. First of all, a couple of the strategies I'm going to show you tonight are some strategies that you can implement that will not take up a ton of your time. They will not necessarily require that you sit in front of the computer for hours and hours to do them, okay? I'm not telling you these are just set and release, forget about them kind of trades. I'm not saying that. I never recommend anyone place a trade and just totally walk away from it, okay? But in a sense, you are able to do that with one of these strategies here tonight that I'm going to show you, okay, that will help you with your time frame. But where I was really going with that is if you're a part-time trader, you've only got a couple hours here and there to trade, and you can't trade every single night. Let's say that it's Saturday or Sunday, and you're planning ahead for the upcoming trading week, and you can only trade 3 nights that week. What do you think might be a good idea, because you don't want to sit there with nothing going on? Would it possibly be a good idea to hop on and check out the news calendar or check out one of these online calendars showing the upcoming news for the night? Now, the U.S. markets, they all open up early in the morning, right? But then early evening, let's say from 7 to 9 Eastern time, we all know that early morning, as soon as the market's open, that's usually when you get the most movement on a market, right? So if you're trading early evening, what markets around the world are kind of opening up right around then? Well, 2 main markets, right? We've got the Australian markets and the Japanese market, okay? So let's take a look at something. So when you're checking for news events, what's one of the things you might want to check for? If you can't trade in the morning and you can only trade in the evening, you might really want to be looking for news events that would be coming out that would affect the Japanese market. So news events coming out of Japan that would affect the Nikkei or affect the yen, right? You want to be looking for things that might affect the Australian market just like we do, they have news events, they have interest rates and monetary releases and all kind of stuff, right? So let's say it's Sunday and you're looking at the news coming out for the week, and it's like, hey, Monday night, we've got Japanese monetary policy report. Tuesday, we've got nothing. Wednesday night, we've got Australian interest rate report, whatever. Hey, do I want to sit and trade Tuesday night? Or do I maybe want to trade Monday night and Wednesday night when these news events are coming out? And then Thursday night when something else is coming out. So just for you part-timers that are having that issue that we just went through that example on, make sure to check for news events and see what nights those are coming out. That could really help you make the most of your limited trading time that's available. That way when you're taking that time away from your family and out of your life, hopefully it's on a night where there's some movement, something going on, okay? So if any of y'all are struggling with that, just a little tip there that can make a big difference for you. And again, anytime you trade, before you start trading, you should be checking news. But for part-timers to plan ahead what nights they want to trade, just a little tip there to help you make the most of it, okay? So let's talk about large moves, all right? Let's say that there's a news event coming out that historically has a pretty big move on the market, okay? How can we take advantage of that? Because we've talked about, hey, it's tough to know ahead of time what direction it's going to go. It's tough to know after because it moves so fast. So what are a couple of ways to take advantage of it here? So we're talking about large moves. So I'm going to briefly show you two ways to trade. We're not going to have time to get into every single entry and exit rules and every aspect and indicators and strategies and system. Everybody uses different strategies and systems and all that. But I'm going to briefly show you one here, and then I'll show you another one. Okay, and I'll show you where you can get some more information on these strategies if you want to dig in a little bit more as well. So we're going to talk about straddles. Okay, and again, if you're new to Nadex or if you're new to Nadex spreads and you're not really familiar with spreads, some of this might be a little over your head. And like I said, you can hop on to the Nadex site and to the YouTube channel, check out some archives. We've done some recent webinars, and I think we're doing some more here over the next few weeks, going through step-by-step the basics of Nadex spreads, what are they, how they work. But a straddle, if you're familiar with spreads, you'll know that there's different spreads to choose from, okay? And spreads have a floor and a ceiling. The way a straddle works is we're going to straddle the market, kind of like straddling a fence where you've got a leg on both sides. What we're going to do is we're going to buy and sell at the same time. We're going to buy the upper spread that's close to the floor, and we're going to sell the lower spread that's close to the ceiling. I'll show you an example here in a second. So, but we have to keep in mind the market must move enough to cover the premium on both sides and the loss on each side, which means there has to be a big enough expected move. So this is a very, very low risk trade, okay? You can do one contract, you can do multiple contracts, but we only use these with larger expected moves, okay? So we're going to buy the upper and we're going to sell the lower, okay? Grant says, I thought you were supposed to buy the ceiling and sell the floor. That's for an iron condor, Grant. And actually, we're going to talk about that next, okay? But for straddle, this is a little bit different here, okay? Because with straddles, we're expecting a big move for this news event that's coming out. We just don't know which way it's going to move. We don't know if the market's going to fly up or if the market's going to fly down, all right? So this is a way that we can go both ways. We can buy and sell ahead of the time, okay? So let's talk about this real quick. How they're determined, we're going to look at premium, and we need at least 150 to move 150% of the risk. Let me show you what I mean by that. So if you're familiar with Nadex spreads, you know, for example, that most of the spreads on Forex, like the 2-hour spreads, for example, or even some of the longer 5-hour spreads, there's 3 different spreads, right? There's an upper spread, a lower spread, and then there's a middle spread. Now, the upper spreads here, so let's say it's, for example, let's say that at 6 o'clock here when the market opens up, let's say the market, let's just use this example right here on the Aussie dollar. It's a little bit older chart, but it's the same concept. So let's say the market's right here about 72.70. So there's going to be a spread that has a floor, a bottom of 72.70, right? That goes up to, well, it depends on if you're looking at 100-point spreads or 250 points, but the point is, let's just say this was a 200, okay? So we've got a bottom of a floor right here, and we've got a top of ceiling here. So we've got a spread that goes from right here at 72.70 going up 200 points, 200 pips, right? So if we thought the market was going up, we might want to buy this spread because we could probably buy it pretty cheap, right? Okay, like Grant, you were talking about, and somebody else mentioned it as well, buying close to the bottom. So let's say the market was at 72.70. Let's say we could buy it for 72.80. So how much risk do I have in that spread? If I buy it for 72.80, if I buy it at 72.80, and the floor is 72.70, that's only 10 pips difference, right? From 72.80 to 72.70. All right, and with Nadex spreads, it's $1 a pip. So I've got 10 pips of risk, so it's what? $10, right? Now that's just an example, okay, using $10. We also have the bottom spread here. All right, it has a ceiling of 72.70 going down 200 pips. So if we thought the market was going down, we might want to sell this spread, right? And make money as it goes down. So let's say that I could sell this spread at 72.60. Okay, so the market's at 70, but I can sell it down here for 60. So how much risk do I have on each side, for example, in this example? I'm basically risking $10 on the buy side, and I'm risking $10 on the sell side, correct? Because there's going to be a little premium built in there, right? If the market's at 72.70, I'm going to probably have to pay 72.80 or 72.90 for it, right? I'm going to pay a little bit more for it. So in this example, I can buy this spread, let's say $10 or $15 risk. I can sell this spread for, say, $10 or $15 risk. Now, it might be more, it might be less. I'm using examples here. Okay, on big moves, there might be a decent amount of premium in there. I might be risking 20 or 30 or 40 bucks. Does everybody understand that concept? The market's right here in the middle. The news event's about to come out. So I'm going to buy this one in case the market goes up. At the same time, I'm going to sell this spread in case the market goes down. I don't know ahead of time which way it's going to go, right? I just know historically it has a history of moving really a lot. So let's just say for numbers sake, say the market's at 72.70. Let's say I had to buy this one for 72.90. So I got $20 of risk in here, right? Let's say I also had 20 risk on this one. News event comes out, boom, market flies down. All the way down here to 70.80. Okay, so I sold this one at what? Market's at 72.70. Let's say I had 20 risk in there. Let's say I sold it at 72.50, right? So I made money from 72.50 all the way down to 70.80. right? So I made, what, 170 pips on that? Everybody follow? So I didn't know which way the market was going to go. And it ended up shooting way down. So I made money on this. But then what happened up here? I had $20 risk because I bought this saying the market would go up. The market didn't go up, the market went down. So how much did I lose up here? With $20 risk, market shoots down, I'm going to lose 20 on this side, correct? Okay, so I made 170 pips down here, but I lost 20 up here, so I'm up 150. Does that make sense? So for a risk of, for example here, 40 bucks, 20 on each side, I can get in not knowing which way the market's going to go. I just know that I'm expecting it to move a lot. So I'm buying and selling. That way, whichever way it goes, I can try to take advantage of it. Okay? Does that make sense, what I'm doing there? We're buying the upper spread, which is close to the floor, so there's not a lot of risk, and there's room for it to go. We're selling the lower spread, close to the ceiling, so there's not a lot of risk, but room for it to go. We don't, big news event, expected to move the market a lot. I don't know which way it's going to go, so I'm going to buy and sell. I got risk, a little bit of risk on both sides. Okay? Again, if some of you are new to Nadex spreads, this might not make sense completely, but if you stick with us here and then you check out some of those older webinars on how spreads work, it'll make perfect sense to you. So does everybody understand this strategy here and how it works and that we're going both ways? Now, some of you are thinking, oh man, I've hopped on before and I see some of these low risk spreads. I only got to put up like 10 bucks. So why don't I just do this all the time? I think this is the only thing I'm ever going to trade. I think I'm just going to, every time I sit down to trade, I think I'm just going to buy and sell because I only got to risk 10 bucks here and 10 bucks here. Okay, so what happens if the market's not moving? What happens if the market just stays flat right where it is and then your spreads expire? You would lose what? Both sides, right? Yeah. So don't get all excited and be like, oh, I love that. I don't have to learn to trade. I don't have to figure out which way it's going to go. I don't have to read the markets or a chart. I'll just buy and sell every time. Well, when you're getting these low risk spreads like that, you're going to have premium built in. That's why I said if the market's at 72.70, you're probably going to pay like 72.80 or 72.85. There's a little bit of premium built in. So let's just say, all right, let's say I got $15. Let's just say I got $15 risk on each side. The market moves up 20 pips. Cool. Well, is it cool? Because you broke even on one, but you lost 20 on the other. Right? So my point is, remember this slide right here? The slide before this? It confused some of you. Need at least to move 150% of risk. Some of you didn't know what I meant by that. Now you do. If you're going to be risking 20 on this side and 20 on this side, that's 40. So if the market moves one way 40, you're at break even. So you'd want it to go more than that. Does everybody understand that? You can't just throw these trades on randomly any night when the market's just flat. It's not going to move enough to cover your premium risk. This type of trade is meant for big moves, when we expect a big move in the market. And you just don't know which way it's going to go. You know historically it moves the market 100 pips. You just don't know if it's going to move it 100 pips up or 100 pips down. So you want to do both. You want to buy and sell. That way you can take advantage of whichever way it's going. You just have to make sure the expected move is more than your combined risk. Does that make sense? Pedro says, so basically you make money when there is momentum or enough movement. Exactly, Pedro. Yep. And that's why you don't want to use this just anytime, any day, any news event. You want to use it on news events where there's going to be volatility, where there's going to be movement. Okay? When do you enter the trade? 10 minutes, 30 minutes, or 1 hour before the news? Grant, that's a good question, and that's not a single answer question. A couple things here. It all depends on, again, the news. When you go and you check out these news events, all right, and you're looking online, again, whatever website or you know, service you want to use, and it tells you the historical movements. One of the other things that most of them will also tell you, it'll tell you how much the market normally moves afterwards, but it'll also give you a little bit of a history of what the market does before it. For example, there's certain news events where the market's just trading all over the place before the news event comes out. Then there's some news events where the market just goes dead 1 hour or 30 minutes or 2 hours before that news event. So it kind of depends on that particular news event, okay? One of the other things that will happen, Grant, is you'll see that based on the news events and based on the IV of options, you'll see that sometimes the closer to that news event you get, the more premium will get higher with the expectations of the news coming out. So I kind of look at the history of the news and what the market does ahead of time, and I also keep an eye on my premium, all right? Like if I see that, hey, premium's pretty good right now, I can get in with $15, $20 risk on each side, I might go ahead and snag it even if it's an hour ahead of time. Sometimes 2 hours at a time, just depends on what the trade is, because I want to get in it with as low risk as possible. Okay, so everybody kind of understand the concept of this trade. I'll show you at the end of the webinar where you can go over to our website and you can watch some detailed webinars absolutely free on this strategy to get more information on it, get a little more idea. We just don't have time tonight to cover every single detail of it. Okay, so this is for high impact news that's going to move the market a lot. Now, most news, Grant, I'm going to answer your question right here. Most news events won't move the market enough. These straddles are great and they're easy, but you got to have the right ones. Like I said, don't just randomly do them. Know the historical moves. Test these out in demo. I talked to you in the beginning of the webinar about opening a demo account with Nadex. Test these out in demo. Keep an eye on the news. Try a few of these and get the hang of it before you switch over to doing it live. Most news events are going to be smaller events, all right? And they'll have kind of expected ranges. You can look at the historical impact. And with this type of trade, what we're looking for is we're wanting the market to stay flat, all right? We know that historically it doesn't have a big impact on the market, but some people don't really want to trade around news time. We want the market to stay flat. It's what we call a range-bound trade. And what we're looking to do here is we're looking to collect premium. So this is going to sound at first a lot like the straddle we just talked about because it's using two different spreads, but it's going to be the exact opposite. Okay? So clear your mind of what we just talked about and pay close attention here because this one's going to be a little bit more in depth, but as soon as you get the aha light bulb goes off, you'll understand the two differences here. So the first one we talked about was wanting those big moves and how to trade those big moves. This one is, hey, when it's a news event that doesn't have a whole lot of impact, okay? Or, hey, this news event, right when it comes out, the market will pop up, but then the market retraces back down historically. So how do we take advantage of that? Well, this is what we call iron condors with Nadex spreads. So clear your mind for a minute. Think about it like this. In any business, what is the old term? Buy low, sell high. Or sell high and buy back lower, right? So think about this. If you could buy whatever the market is right now, if you could buy for lower than the market, would that be a good thing? If the market's at 1,000 but you could buy for 980, that would be a good thing, right? Because you're able to buy lower than the market. If you could sell higher than where the current market is, that might possibly be a good thing, right? Depending on your strategy. Let's take a look here. So, iron condors. The biggest mistake with iron condors is the wrong direction, because this is very similar to the straddles we just covered, but it's the opposite. Remember with the straddle we covered earlier? What did we do with this upper spread? Did we buy this upper or did we sell it? We bought it, right? We bought this upper and we sold this lower because we were expecting the market to shoot one way or the other. Remember? Now, it's called a straddle. An iron condor is the exact opposite. We're going to sell the upper one and we're going to buy the lower one. So follow me through here, okay? So, quick example of premium here on this screenshot. Remember we talked about over here that the market was right here at 72.70. But we could buy it, so there's premium built in, so if we bought it, we'd have to buy it at what? 72.90. So remember, we said, hey, there's $20 of premium in here that we're paying, right? Everybody follow me? There's 20 of premium. Because the market was right here, but I couldn't get in. I had to get in up here to buy it. Well, what if instead of buying it, I sold it right here? Let's talk about that. Follow me here. So, just look at this quick example here, okay? On this, you know what, I'll show you a live example in just a minute. So, let's talk about this. For an example, follow me here. Let's say there's a Nadex spread that's from 600 to 700. The floor is 600, the ceiling is 700, okay? The market right now is at 700. The market's at the top. So the spread is 600 to 700. But I can buy the spread for 680. So I'm buying below the market, right? Let's say the spread, so I buy it for 680. The spread expires at 700. The market stays at 700. The spread expires at 700. How much did I make? And the market didn't move at all. The market just stayed flat. Right, because on a spread, my profit is the difference of where I bought it compared to where I sell it or where it expires, right? So we got a spread from 600 to 700. The market's at 700, but I can buy it for 680. It expires at 700. I made 20 bucks. And the market didn't move at all, did it? I just collected premium there. The first strategy we looked at, I paid premium, right? In this one, I'm collecting premium. Let's look at another example. Let's say that there's another spread. The spread is from 700 to 800. So that means the floor is 700, the ceiling is 800. And the same thing, the market's at where? 700 right now. I can sell this spread for 720. So the market's at 700, but I'm selling above at 720. Same example, stays flat, market expires at 700. How much did I make on that? 20 bucks. Because again, the profit is the difference of where I sold to where it expires. So let's look at that. Okay, I'm going to come back to that slide right there. So, two spreads. We got this spread right here. The top is 700 going down to 600. Right? The bottom spread. Then we got another spread where the floor is 700 going up to 800. So I sold this spread at 720. So I can profit from where? From 720 down to 700. Right? Down here, I bought this spread. I bought it at 680, so I can profit from 680 up to 700. So let's say I did these at the same time. There's a news event coming out. It historically doesn't move the market a whole lot. So I'm expecting the market to be range bound. I'm expecting the market to just stay within this range, right? Of 680 to 720, somewhere in this range, right? So I sold up here and I bought down here. So what if the market tweeters around and boom, expires at 700? What do I make? 20 on each side, right? So I make 40 bucks. Everybody follow that? It expired in the middle, so I made 20 on each side. Okay? Do you understand the difference there? With this trade, this strategy, I want the market to stay within a range here. This is a news event that I'm not expecting a lot of movement on. Or I'm expecting that when the news event comes out, historically it pops the market and then the market comes back down. I want it to stay within a range. I'm expecting it to stay within a range. The other strategy we talked about was when we're expecting it to shoot way up. Okay? So, the market expires at 700. I make 20 on both sides. What happens if the market moves? Okay? And let's see here. Why only a news event? Can it be at any time? Leonard says, why only a news event? Can it be at any time we're in a flat market? You know what, Leonard? We have a lot of people that do iron condors all the time, okay, when they're expecting flat markets. Now, the only difference is what you have to make sure to look for, Leonard, is when there's nothing. Here's the thing. When there is a news event coming out, that's when you get a little more premium built in to the IV of options. Okay, so there will be a little bit more premium built in here. Now, you can still do iron condors anytime if you're expecting it to be a range bound or flat market. You just have to make sure to get enough premium in the spreads to give yourself some room. Okay, so yes, you can do them anytime. Okay, just tonight we're just covering the topic of ways to trade news events, but yeah, we have people that do these literally every day. Okay, so let's see here. In Nadex, are they hypothetically contracts already offered at 720 and 680 simultaneously, as in this example? Or do you have to wait until the market moves to 720 to sell, then down to 680 to buy, like in Forex? Chad, I'm not sure exactly about the second half of your question there. Kind of does go back to what we talked about earlier as to where depending on the news event, and someone asked earlier how, what time do you enter these? Do you enter 30 minutes ahead or an hour ahead? Well, that's what you want to look at here is for the premium. Because ahead of time, okay, this news event's coming out. It normally moves the market X amount. okay? So if I'm expecting X amount of move in the market and then a certain retrace, I want to make sure I've got enough, you know, premium in here to fit that range, okay? But I'll show you here in just a moment, Chad, how you can normally find these. You don't necessarily have to wait for the markets to move. Give me just a moment here and I'll show you a couple examples, okay? Grant says, don't you need to know about pivots, double pivots, the same play? You know, I don't necessarily, you know, Grant, we have people, like I said, that trade these all the time, even, you know, every day, like not just around news events. And, you know, people use all kind of different strategies and systems and expected ranges or FIB, whatever levels for that. But with the news trading, we're just looking at the historical move. We're not necessarily looking for, you know, pivots and X support and resistance or whatever, because, you know, some of those levels that you normally use in your day-to-day trading don't always necessarily apply when there's a big news event coming out that could blow it right through that. You know what I mean? You got to look at more than just your normal levels because you're looking at something that's abnormal. You know what I mean? So that's why we're looking at, hey, historically over the last X amount of years, this news release only affects the market X amount. So again, you know, I mean, taking levels and strategies and systems and indicators into place are great, but you got to realize you're looking at an abnormal thing with a news event. That's why personally I'm looking more for, hey, not is this going through X level, but what is the history of this event? Because it's an out of norm event, okay? The price depend on the market or pair. Eric says, will they be really expensive or will the price depend on the market or pair? It all depends on what you're trading there. You know, when you're buying the lower, you know, you're going to have to put up out of your account from the floor up to where you buy. So iron condors do at times require a little bit more upfront to get into the trade, but they're extremely low risk trade, and you give yourself a huge huge advantage, okay? Take a look at this. Let me just show you. So if it expires right here in the middle, I make what? 20 on each side. Right, Eric? Let's say the market actually was not as range bound, was not as flat as we hoped. It did have a little move. It actually went up here and expired right here at 720. So did I make anything on, okay, so it didn't expire in the middle. It went up and it expired right here at 720 where I sold. So on this one here, I sold it at 720. The market moved up and expired at 720. So on this one here, did I make anything, lose anything, or break even on this sold one? Break even, right? Because I sold it at 720, it expired at 720. So I didn't make anything or lose anything on this one, right? I'm break even. But what did I make on this one? So the market went up. I made 20 bucks. So the market moved 20 pips against me. Like I wanted it to be right in the middle, but it actually moved up 20 pips. I still made 20 bucks. What if it wasn't as range bound? The market went way up here to 740. Well, I sold it at 720. It expired at 740. So I lost $20 on this side, right? But I still made 20 down here. So I'm still at break even. Everybody see that? So I'm risking, okay, so I have the potential to make 40 bucks here if I'm right, and it expires in the middle. So let's say I want to have a 1-to-1 risk-reward ratio. I want to risk 40 to make 40. So if the market doesn't stay in this range, it flies all the way up here to 740, I'm still at break even. it has to go all the way up here to 780 for me to lose 40 bucks. Everybody understand that? So yeah, you got to put up a little bit more to get in these iron condors, but your risk to reward ratio, you give yourself a huge range to be right. It can go against you. The market is here at 700. You expect it to be a small news event, but it could shoot way up here against you to 740. You're still at break even. It can go all the way up here. You have a huge range. Okay. Ariel, in this example, if the floor is 600 and you buy at 680, how can you say this is buying low since it's close to the ceiling? Now, I'm not saying you're buying low. I'm saying you're buying the lower spread. Okay, if the market's at 700, the lower spread is the one that goes from 700 down to 600. That's the lower spread. Let me show you. The platform, it's after 6 o'clock. Nadex is back up. Let me show you a quick example here. Let's say we go here to Forex spreads. Let's just choose pound yen, for example. Got these spreads right here, 6 p.m. to 8 p.m. We've got 3 spreads. See that? We got the upper spread and the lower spread. Look at this lower spread here, Ariel. See, it's 134.90 is the top, the ceiling, and it goes down 100 pips, right? That's the lower spread. See this 134.90? Look up here. 134.90 is the what? The floor of this one going up 100 pips. So this is the top spread. This is the lower spread. Then we've got the spread right in the middle. Okay, does that make sense? So when I said lower, I was just saying you're buying the lower spread. See, when we were talking about straddles earlier, we were selling the lower spread. Remember? But with the iron condors, where we're not expecting a big move, we're buying the lower one. Okay? So real quick here, I just want to show you a quick example because we're running out of some time here. Let's go back to Forex spreads. Let's go to pound yen. Let's take a look here. Okay, so we've got these 3 spreads here. Okay, so where is the pound yen indicative right now? 134 what? 92. Everybody see that? 134.92. Where can I sell this top spread at? Right now. I'm not telling you to do this trade. I'm just showing you an example. 134.92, and I can sell it for 135.08. What's the difference right there? Right now as we speak, about 18 pips of what? Premium, right? So if I were to sell that upper spread, it would be just like this, except it's not 20, it's 18. This is the upper spread. I'm able to sell it way up here, right? Okay. Now, granted, you got to look at the floor of the spread. I mean, the floor of the spread is at 135, so it's 135.07. So technically, there's only 7 pips of premium there. Let's look at a daily. All right, check this out. Where is pound yen? 134.90. Where can I sell it at? 135.42. Where's the floor of the spread? 135. Where can I sell it at right now? 135.43. $43 of premium on the top there. You see that? So where is another? So the floor is 135. Where is a spread that has a ceiling at 135? Right here. Where can I buy it at? 134.49. Where's the market? 130, or what's the, so 135 down to 134.40, again, about 50 pips. Okay, you see that? Again, even on the spreads that expire in just a few hours, you see there's premium built in there. Look at some of the indices for tomorrow. Let's look at US Tech daily. Let's see here. If I wanted to sell this one, where's the market at? 47.44. Okay, the floor of this spread is what? 47.50. Where can I sell it at? 47.59. That's 90 pips. 90 pips higher. Let's look at something real quick. 47.59. Everybody see that? 47.59. This is on NQ, the NASDAQ, right? 47.59. And sell it right here, 47.59. Okay? So, and then 47.50, this one. Where can I buy this one at? 47.37. Where's the market? 47.45. It's quite a bit difference, right? 47.37. So, where is 47.30? Right here. So, I'm buying this one down here, selling this one up here. I've given myself this range, right? So if the market expires somewhere in between here, I can make money on both sides. Okay, Chad says, oh, I had my aha moment. Okay, so I just wanted to show you the platform real quick because it just opened up to show you there's premium there. Okay, somebody asked earlier, well, is there really premium there? Do you got to wait for markets to move? Hey, there's premium built into these. Now, premium can change around news events. It can get higher, you know, right before news events. You know, that's part of the reason you want to play with this and get to know this a little bit. Okay, so anyway, we're running way over here. Couple things here. Make sure to open your Nadex demo account and start using these two strategies in demo. Okay, get a handle on them, play with them, start looking at the news events, do some demo trading on these. You know, some of you are asking, can I do this all the time? Can I do this every day? You know what? Start doing it in demo. Learn it in demo. They're right there. I was just showing you the demo platform. Okay, but hop on over and visit us at apexinvesting.com. Okay, go check out our website. We have literally hundreds of hours of free education, free webinars, free step-by-step training courses. I got step-by-step training courses on binary, step-by-step on spreads. Like I said, if you're brand new, check them out. They're not just a quick webinar. It's literally modules and units, step-by-step training on what is a binary, what is a spread, how do they work, strategies and systems. You can go over there under the spread section and you can watch webinars dedicated to both of these strategies I showed you tonight, to where you can go in and get a little more in-depth information on them. Check out those videos. Like I said, we got a news calendar over there, some binary and spread scanners, free deviation levels, all kind of good stuff over there. Go ahead and check that out. Like I said, we have the binary and spread scanners. It'll scan those different options for you real quick. It'll show you all the different spreads available. For example, like real quick, this is a real easy way to spot those iron condors on our spread scanner. It shows you the premium, and you can just look real quick and say, okay, over here on the buy side, there's $32 of premium here. On the sell side, there's $32 of premium here. Or if you're looking ahead of time before the news events and you're trying to see, is there enough premium? Is there not? Do I calculate it in my head? Just a real easy way to find those real quick. And follow us over on Facebook.com/ApexInvesting. Like us and follow us on Facebook. Get some good alerts and notifications over there of upcoming news events, webinars, new strategies, new systems. Just a great place to get some free information. So, all right, guys, I'm sorry I kept you a little longer here. I just wanted to make sure we tried to answer as many questions as we could and make sure that you guys had a really good idea of these two different strategies here. So great strategies to take and use to trade the capped risk Nadex products around news times. Okay, so if you have any questions, feel free to let us know. This webinar was recorded, and hopefully the video will be up under the archives here in just a couple of days. So we appreciate everybody taking the time out tonight to be with us on the webinar, and look forward here. Check your emails. Look for the links to join us next Monday and every single Monday for these Nadex application and strategy webinar series. So thank you for your time, and thanks again to Nadex for having us. Hope everyone has a great night, and we will see you next week. Thank you very much.